What up, what up, what up? It's your favorite YouTuber's favorite YouTuber. That's right, guys. It's your boy, the Options Boss, sliding up on y'all. I hope all is good. I hope you guys enjoyed yourselves. I hope you guys made some money today. And I hope you're ready to study so we can be prepared to make some money tomorrow. Now, with that being said, I'm going to talk to you guys about a few things today. And of course, one of the things I'm going to talk to y'all about is this cool Options Boss face mask. Guys, you definitely want to cop up. You want to stay protected from the Rona. This is definitely a cool, fashionable way to do it. And if you grab one, you're supporting the channel, and I definitely appreciate that. Guys, I'm going to leave a link in the description. Grab one of them. Grab t-shirts, whatever it is you want to grab. We got all that on the website. Now, with that being said, guys, getting down to real business, we're going to talk about what the market is doing now. And I'm going to update you guys on an older video that I did. As happens with time, times change, things change. I want to update you guys on what indicators I'm currently using on Webull to trade options. And you guys are more than welcome to use this template, update your Webull indicators that you're using, and therefore you'll be able to trade and see exactly what the boss is seeing as I'm seeing it. So, that being the case, veterans of the channel, y'all already know how I go. Go down below, like the video, drop a comment. Every time you do, your support helps my channel grow. And for that, guys, I appreciate you so much. Also, watch this video in its entirety. If you watch it from beginning to end, you'll learn throughout the process. And the YouTube algorithm is going to love me. And for that, I love you. Newbies to the channel, you already know how I go. If you're interested in the stock market, if you want to learn about trading options, I'm your boy. I'm the Options Boss. I'm going to give you the game from A to Z and let you know how the thing go. So what you want to do, you want to go down below. You want to subscribe to the channel. You want to click the notification bell and click all notifications. And when I drop these Get Money Jewels, you'll get it first things first, right off the press, so we can put these game plans and strategies right into play the very next day as soon as the market opens. Now, that being said, guys, it's been a wild, topsy-turvy week so far. It's been a lot of volatility, a lot of swings up, but not too far up, and then swings down, but we're not going too far down. Right now, we're trading inside of a channel, and it's not really a productive thing for the market overall. Right now, we're staying in between 437, and we're not going much lower than 433. And that's putting us in an area where it's hard to move. You can't really make a lot of money off of puts. You can't really make a lot of money off calls because there's not enough movement up or down. So what we're looking for is we're looking for the market to either break down. And I was looking at a couple areas today. I was looking at 435. One spot went over 435. I was looking if they broke under there. That could be a scenario where you grab some puts. And for the record, I did grab puts in my options group chat. A couple of spot puts that I'm going to swing and see what happened with them. But at the same time, the market hasn't set its direction one way or another. So I also am in some calls. Some of which being Tesla calls that I'm very interested to see how they play out over the next week or so. But nevertheless, for those calls and for the market itself to be bullish, we at minimum need to reclaim that 437 area. If we can reclaim that area, then the bulls will have a chance of being able to come and take over. If we can't reclaim that area, we're in no man's land, and what we're looking for at that point would be for us to lose 435. If we lose 435, then the bears will have a chance to come in and we can maybe make some money with puts. So those are the areas we're looking for. And guys, a lot of this stuff I'm telling you, I know because I look at the charts. And I want you guys to really get in the habit of when you trade, look at charts. Because if you trade without charts, and guys, listen, I'm not bashing because I've done this for a year before I realized how helpful charts were. But if you look at the charts, it gives you a really, really, really big advantage if you understanding, should I say, not just looking at it, but if you're understanding what the charts are telling you, if you're using your indicators and you understand how those indicators work, it gives you an advantage. It gives you an idea of what might happen in the market, which is how I'm able to tell you, you know, what happens if we lose 435 or what happens if we gain 437 or different numbers I've told you guys on different stocks throughout this channel. So with that being said, if you look at the charts and you have your indicators set up and you looking at price action and you looking at different, potential patterns that could come about, you may have an idea of what's happening here. So I'm going to show you guys the indicators that I'm trading with currently, and hopefully this will help you guys decide on the indicators that you may want to use. For every indicator there's a strong suit to it and there's a weak point to it. So you have to kind of sort of play around with them and find what really works for you and your style of trading. What I've settled on over the past few months has been what I'm about to show you guys now. So we're going to switch over to Webull. I'm going to show you guys what these indicators are and how they work and how they are effective for me, and hopefully it's effective for you. And we're going to switch over and we're going to do that right now. Alright guys, so here we are over here on Webull. As you see, it's after hours and I am on Tesla's chart. And essentially this is how your chart will look if you were on Webull looking at Tesla. And actually I'm a little bit inaccurate. Your chart, just to show you 1000%, is going to look something along the lines of this. Now me, I like to see my chart up close and personal, and I like to see it as big as possible. So when this happens, you'll see me come over here and I'll click this little arrow to push Tesla out, and then we have a little arrow on the other side and I'll click that and push Tesla out, and then we have one down here at the bottom and I'll click that and make my chart bigger. Now also, I don't like the white background on my charts, so I'll go over here where it says settings. I'll click on that and I will make my theme color dark. Now when I go back to the Tesla chart, it looks a little sexy. You see the candles a little bit better, and that's what I like to see. Now, other than visually, the most important thing, of course, is the indicators that we're using. So that's really what I want to emphasize to you guys. I'm going to show you the indicators that we're using, and I'm going to do that right up here. You go up here, you will click indicators. Now, as fate may have it, because Webull knows what I use, the 3 indicators that I primarily use right now are already up here as frequently used. So you'll see the RSI, and I'll click that, and I'm actually going to show you. I'm not even going to click it there. We'll go to all indicators, and then you're going to scroll down this list, and you're going to get to where you see subchart. And once you see subchart, down here is where you'll find the RSI. And when I click the RSI, boom, it's set up. I don't do any editing to the RSI. So as I always tell people, the RSI is what it is. It's 14-day. That's just what I use. Now, also, I use the EMA. So you go, again, to all indicators, main chart, and you see EMA right there. You click on EMA. Now, EMA, I do edit, so I'm going to show you guys that. Also, I use the VWAP. The VWAP, again, you go to all indicators, you go to main chart, and you scroll all the way down to the bottom of main chart and VWAP. And I don't do any editing to the VWAP. The VWAP is what it is. The only one that I edit is the EMA. Now, I'm going to go into the EMA, and I'm going to show you what I do. So, I use 4 EMAs, guys. I use the 8-day EMA. So, if you wanted to change this length, you can just go in and let's just say you wanted to use a 5-day EMA. And you would just type 5 right there. Now, each EMA has advantages and disadvantages to it. But essentially, the amount of days that EMA covers, and EMA, if you guys don't know, is exponential moving average. So essentially, some people that are geniuses that know math really, really well came up with a way to figure out how a stock moves on average over a certain amount of time. And that amount of time is whatever days you choose, 8-day, 20-day, 10-day, 9-day, 21-day, whatever. And they have some type of formula they put together that basically explains that. So me, I use 4 different EMAs. I use the 8-day EMA, and that's really good for short-term trading, which you guys, if you watch the channel, you know I try to day trade as often as I possibly can. So the 8-day is what I use. Not to change that. Also, I use the 20-day EMA. And the 20-day EMA is it's a little more popular. It's something that you'll hear a lot of traders talking about. And it's good to have that 20-day EMA because it's still sort of short-term. And at the same time of it being short-term, the 20-day EMA is something that's more broad. So you'll see a lot of movements, a lot of things bounce off the 20-day EMA or resist at the 20-day EMA because a lot of people trade with the 20-day EMA. It's a very popular EMA to use. Also, the 50-day EMA, and I could say the same thing for the 50-day as I do the 20-day. The only difference is the 50-day is a little more, I don't want to call it long-term, but it's a little more solid, and it gives you a little more of a longer idea of how the stock has been acting as opposed to the past few weeks that the 20-day will give you. And then finally, I trade with the 200-day EMA. And the 200-day is really long-term. That's really good for 2 reasons. It's good if you're buying stocks to hold long-term, and it's good to have because, again, if a stock breaks down to its 200-day EMA, 9 times out of 10 or even 8 times out of 10, we'll say, that stock is going to bounce. And when it bounces, you want to know that that's what's happening so you can capitalize off of it. So it's good to have that 20-day EMA. So if you catch one bouncing around that area, you'll know what to do appropriately from there. Now, a lot of times the EMAs, especially the 20, the 50, and the 200, they act as a bit of support and sometimes even a bit of resistance for stocks. So when you see a stock break through the 20 level or the 50 level or the 200 level, it could be a bullish sign. Likewise, if you see a stock fall past that 20 level or that 50 level or that 200 level, it could be a bearish sign. And guys, actually what I did today, I jumped into a play today strictly based off of a stock losing its 50-day EMA, And when I jumped into that play, I jumped into it strictly because it lost the 50-day. And what happened, lo and behold, the thing worked out perfectly, and we had a 50% win off of it. If you want to know how I did that, what I saw that let me know that, and the name of that company that did that today, you definitely want to sign up for Tier 3 of my YouTube Premium membership for $29.99 a month. I give you guys a lot of the technicals, a lot of the ins and outs of trading to let you guys really have an idea of how to make these power moves on your own because you want to be knowledgeable in this game. This game is a game that's going to make you a lot of money if you put in the effort. So if you're interested in the effort, the knowledge is there for you. Definitely sign up to my Tier 3. I'll leave a link to my Tier 3 in my description down below. And you're going to see how I saw a stock mess around with that 50-day EMA. And because I knew what to do off that 50-day EMA, I jumped in. I got a 50% win off of that play today. And I want you to see that so you can do the same for yourself tomorrow. Now, that's how I use my EMAs. What you want to do is you want to make sure they're different colors. So this way you know which is which. So my 8-day EMA is kind of like a purplish color. Then I got kind of like an orangish type of color for my 20-day. Then I got like a light blue type, gray type of thing going on for my 50-day EMA. And then I got a dark blue going on for my 20-day EMA. So this way, when I see it on my chart, I know which EMA this is because I know that I got different colors for each EMA. So this is what you want to do. You want to go into that EMA and you want to edit it and you want to understand exactly how it moves. Now, I also want to show you guys, like I said, I don't really do no editing to it, but I also want to show you guys the VWAP. So if you were to edit the VWAP, guys, which I don't do, but excuse me, I actually passed it. If you wanted to edit the VWAP, the only thing I do is I make sure it's a color that I like. So right now, I got yellow. So if I see yellow on my chart, I know that's my VWAP. And the VWAP, just to give you a quick rundown, is volume weighted average price. And again, some math genius basically broke down a volume weighted average price over the course of whatever amount of days your VWAP is, mine being 14. And with that being the case, basically how the VWAP works is very simple. If your stock, if the candles are over the VWAP at that time, the stock is bullish at that time. And if the candles are under the VWAP at that time, then the stock is bearish at that time. So it's a very easy indicator. It's one that pretty much all newer traders should use to get comfortable with and then branch out from there. Myself, I started with it and stuck with it just because it's a good indicator and I feel comfortable with it. And then, guys, you also have the RSI, which I want to show you. And this RSI is down below the chart. It's set to 14, so I don't do anything there. But essentially, the RSI is in between, as you see down here. It'll go in between 30 for the most part and 70 at the highest point. And essentially, what you're looking for is if a stock has an RSI and the RSI is, near 30 or something along those lines, that stock is oversold, which means that buyers are going to eventually come in and start buying that stock up because too many people are selling it. And on the flip side, if that RSI is over 70, then what's going to happen, or at 70, what's going to happen is it's overbought. So at a point, people are going to start taking profit on this stock and they're going to get out of there. So you want to watch for that 30 to 70 range in the RSI. That's where it mainly stays. And if you see something going down there 30, it might be time to look for an indicator to buy because things are going to flip. And if you see something going up towards 70, it might be time to look for an indicator because it's going to flip and start selling. So that's what I want you guys to look for. And again, I got more information. I got more in-depth information like this in Tier 3. So I really hope you guys take the time to check out Tier 3 and to see what it's about and to learn something that can potentially change your financial future and hopefully your families as well. Guys, don't forget, you can always be a boss with the options boss. You already know I'm a holler when I holler.